Hey everybody, welcome back. It's Pete Carmasino at the halftime show here on Chaikin Analytics. We're here on StockCharts TV every week at Monday at 1:15, so thanks for joining me. I'm the chief market strategist here, and each week we kind of go over the power gauge, a few different ways to look at it, and I've been got into a groove of kind of looking at some ETFs that are changing trend or sort of starting to get very interesting. We started with the major indices, and I'm moving into the retail ETF symbol XRT. And we'll look at some of the top names. Now it's an equally weighted fund, so some of the top names are very marginally different as far as weighting goes. But in general, we can start to see some patterns and some things taking shape, especially on the ETF itself. So as we come off of a very boring and kind of sideways summer, we saw 5 straight weeks in a row of really rapid gains, kind of settled down last week, and we're starting off the week a little mixed, but hopefully we can get back into that mode and rally into year end. So it's holiday time, so a lot of the retailers are starting to look good. Now we've got some supply chain issues, and they've been backing up. Obviously, we've been talking about it. It was on 60 Minutes last night. There's a lot going on in this whole area, and retail is affected. But at the same time, you can see the pipeline is building, and that we might see a surge in retail earnings, revenues, and activity in general in the coming months, and maybe that lasts into the January, February, March, the first quarter of 2022. It's hard to say right now, no doubt, but we got to follow the trend. We look from the top down. We start looking at the group, and then we look at some names underneath, and we'll look at a few extra names. So I've got about 5 or 6 names that are bullish, a couple that are neutral, that are top weighted, and then just a couple of names that are starting to stand out and look pretty good. So let's dive into the charts and see what we can see. Okay, hey everybody, we're back here just checking out the chart again. The ACP platform on StockCharts.com is pretty slick, new, and cool, and we have our Chaikin power gauge. That's basically a plug-in component that you can obviously get through StockCharts.com. Pretty inexpensive on an annual basis. I think it's under $40, and it just tells you the rating on each stock. Now we don't share our ETF rating, not yet, but we might be. And if I click on the little power gauge symbol icon right here, which is really cool, if you pull up an ETF, you're just going to get a note that says it's unrated because we're only showing obviously the stock ratings for now. But this is the ETF I'm looking at, so I'm going to give you a sneak peek on our system. Take a look at what XRT does look like from our rating and our own charting perspective. But each week, I kind of jump between 2 platforms, and this one is, if this doesn't look like, it almost looks like the IWM in a way, where it was really a consolidation spring through summer. Obviously, supply chain issues and all of that, labor shortages, you name it, was this was front and center in this group, in this industry. So it's coming out of this with a nice big breakout, I think is really, really positive. And so it just leads you to look at some of these names that are associated or inside this particular ETF. If I go to Chaikin Analytics and look at the XRT, we get something here. We call this, we kind of internally named this, and really we shared it many times externally. But it became the personality change. It's when the personality of a vehicle that we're watching is changing either positively or negatively. In this case, it's positive change. We're getting a very, just ever so slightly change to the upside in the relative strength, which we like to see. There's no doubt. I'd like to see a little stronger, but it's a little shy, a little timid right here. But the main thing we see happening a lot is that the rating does turn ahead. Now, not just on ETFs, but on individual names as well. And so that's how you can use the ACP platform. Again, get a sneak peek at some of the ratings on these stocks, and you can see where they stand, right? So these are advertised, not really in order of weighting, but we're just going to start with AutoNation because, again, I don't know if you looked or considered looking for any type of car. Doesn't matter, used, new, 20 years old to 2 months old. It doesn't matter. It is hard to find a new car or another car or whatever your intentions are. So we look at AutoNation, right? They run a series of obviously auto dealerships. among other things. There's some service involved as well. But look at, I mean, the trend has been phenomenal. So again, inside of this XRT, inside of this ETF, you're seeing components of the market that are doing well, which have been supporting it. Now, if you get a rotation into the other areas like Macy's and OSTK, we'll look at the charts, that just pushes the XRT further higher, right? So when one side's rolling, it might be going in circles, right? If you consider a canoe or a boat or whatever, if only one side's rolling, you're going to go in circles. And in circles for us is sideways, right? Really going nowhere, right? And that's really what the XRT was doing for a moment. So when you don't have all the components working at the same time, you're not rowing in sync, you're not going to go anywhere. Now, potentially, we might start to see some of that. And AutoNation is one of the names that looks interesting. So I'm flipping back and forth here. I apologize. So I'm going to pull up AutoNation here, AN, and that pulls up the symbol. I click it shows me where it's at in the list. It's bullish rated, and we'll look at the rating here. Financials. This is on the ACP platform. You got financials, earnings, and technicals. All looking good. Now, technicals have been weak, so let's take a look. We've got relative strength back and forth, so it hasn't been consistently persistent. A funny way to say it. But we've got money flow a little negative, but we are oversold, and we actually been hanging on to some positive relative strength moves, at least into this new quarter. So back and forth on the rating, back and forth on the trend line. It has been moving back and forth. There's no doubt about it. But up and to the right it goes. The long-term trend looks interesting. And I like it. I mean, I think it's a great pipeline, and there's a lot of things going on. Now, go to AutoZone. What does AutoZone do, right? Parts, right? Car parts. And so if you can't find a new car, you might fix the old one up. That's the theory anyway. But look at the power gauge rating here. Earnings, technicals, and experts all really, really strong. And this is very strong as you can get. Financials are a little weak. Now, that could be due to valuations. Expensive name, $1,900. I don't know if they ever split or not. I feel like they haven't. They might have, but I can't remember if they did. And if I just pop down to our charts, we look at AZO, see what's going on. Relative strength, back and forth, very similar to AutoZone, AutoNation, I should say. And look, rightfully so, although it's up $15, almost 1% today. Rightfully so. It's been back and forth, a shortage of supply. Prices are moving higher. That creates demand destruction in certain areas of this auto market. But parts in general are part of the supply chain issue as well. And so there's a lot of ebb and flow here in this market. But again, this looks pretty interesting here, up sharply. And really, it's been up and to the right for more years. So that looks interesting. So let's look at Boot Barn. I can give you a gander what they do. It's an apparel retailer. Again, a really, really strong name. Now, apparel in general has really been looking interesting. This name, again, with a bullish rating, it really is kind of interesting to find these names as they appear. So Boot, I'll look at our chart. And we got, let's see, we're bullish rated. Yeah, I mean, this is really one of the classic bulls that we kind of look at, not Boot in general, but the pattern of Boot, right? Now, Boot has been phenomenal. I mean, this is more than a triple in less than last year. So it's been pretty steady, but look at the relative strength that stays strong, and the rating kind of keeps you on track. So when you see a name persistently moving in this fashion, you can guess, and looking even at ACP, you can see the trend. There's moving averages. You never cross the shorter term ones, the 20 and the 50. Kind of helps you out, right? The technicals combined with the fundamentals is what we're trying to do. Chico's here, CHS. Now it's a little bit more choppy, a little less followed, potentially a little less traded, but it's definitely a lower price name. Not loving the chart, it's not fantastic, but it is persistently trying to stay positive where you get these fits. And starts here where it moves higher, sideways, breaks down, moves back. Definitely a trading stock, no doubt. So if I pull up CHS here on our system, CHS, we'll take a look at what our charts are telling us. And survey says, okay, so super persistent here until that sideways move, right? And that's what the beauty of this is. And so we're bullish, we're basically neutral. Then we got bearish, and now we're neutral negative. What that tells you, right? What that tells you is that we're getting pieces of our factors in the power gauge are recalibrating and we re-weight them every day. And then when that happens, obviously a new outcome. So we've been persistently seeing the stock doing well. It was neutral for a very long time. Actually turned bullish for, a brief moment, a couple of days. And then relative strength went sideways when we got down. So technicals helped lead it higher and technicals helped lead it lower. And it's really kind of in the mid zone here, again, back to the consolidation level. Not looking great, but it's something that is part of the group. So we look at it. Dillard TDS, really strong. Look at the financials on this. This looks excellent. Really nice coming out of the base and moving higher. So let's hope that maybe we're starting to see a big move in some of these names, because obviously we've got some supply chain issues starting to ease. Labor shortages is it's improving. Holidays around the corner. Again, a persistent relative strength that has just been stellar. Really, it's been what a great stock it has been. So definitely want to look at Dollar Tree. And you've heard about Dollar Tree, right? Obviously, it's a dollar store. And then they basically said they had to change some of their pricing where they're over $1. $1.25, $1.50 for things, no longer just $1. So it's kind of a neutral bag. It kind of was coming off of a downtrend. But sometimes there's opportunity in these relative strength and even these big changes in trend from a downslope to an upslope. You might see this. Now, we are rating it neutral, so the power gauge is kind of mixed bag. Earnings and experts seem to be the best. I'm just going to get rid of that for a second. And again, up over $15. Look at this oversold setup. We improved on our rating. We went from bearish to neutral, and then relative strength helped us out, right? And that's what you want to see. So from the power of the ACP platform, looking at our rating change with some MACD changes and some other areas, have a moving average crossover. You have multiple ways, multiple indicators that you can follow to find the changes in trend. And that was just one of them. Now, Macy's, well, we've been calling this out for a while now. Our members started to notice this somewhere around that $20 level. That we do daily market notes, we do weekly market notes, we do 2 videos a week. We try to keep everybody abreast of what's going on. In Macy's, we were calling out at around $19 to $20 a share, going to 30. That's a 50% move. Again, certainly a name that you're familiar with if you've driven by one mall in your life. You've seen Macy's somewhere. And relative strength, when that starts to change here, we got that first pullback. These were great entry level setups. But from a retail perspective, it's doing really well. I mean, excellent looking chart, strong stock, strong industry, relative strength, all great. But again, that power gauge was very bullish. Look what it did. It upgraded before the relative strength started to move. So once you're paying attention to the ratings as they change, you might be able to take advantage. Now, Overstock's a really cool company. They've got a lot of verticals, no doubt. We know what they do. They typically were buying overstocked items from other major retailers and selling them at sometimes a discount. But all of this looks very good, very bullish, interesting. They're also getting into the crypto market with some exchanges. I don't really have a lot of details on that, but it's worth taking a look. I wouldn't call it a crypto name, but it's got some other verticals that it's trying to get exposure to. Again, you start to see this name, it's overbought, relative strength change. I like it. And the last one is Revolve. And we'll take a quick look at this one. Again, coming off the consolidation level, a bullish name. If I go and take a look at the stock real quick. Yep, Internet Direct Marketing and Retail, another great name, very persistent relative strength. It was definitely one to watch. Okay, folks, that's all the time we have for today. Hopefully you learned something here. You can see how you can use the power of technicals and fundamentals. Stay tuned. We'll be back next week. Appreciate the feedback. Anything you want to write in the comments, we'll be happy to respond to. But thanks again. Take care. Have a great week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.